Namaskar and welcome to the 8th part of this fundamental analysis course. Last time, we had given you an assignment in which you had to calculate the retained earnings of ICICI Securities for the last 5 years. We hope that you have done it. We will repeat once again how retained earnings are calculated. To calculate retained earnings, you will have to look at net profit. From that, you will have to subtract dividend, dividend distribution tax, and share buyback amount. ICICI Securities has not done any share buyback until now. This is why you will only have to subtract dividend and dividend distribution tax from net profit. Recently, you might have observed that many companies are opting for share buyback instead of paying dividend. You might have the question as to why this is happening. We will discuss that today. The company shares a certain proportion of profits with its shareholders. This is called dividend. When the company pays dividend to its shareholders, it has to pay dividend distribution tax on it. Because of the dividend distribution tax, the shareholders' benefit from the dividend gets reduced. This is why many companies have stopped giving dividend for now. If any company is giving dividend, then it is generally a small amount. For now, they are concentrating on share buybacks so that shareholders get more benefit. Now, let us come back to the main topic. We were talking about reserves and surplus. We had mentioned that retained earnings are a very important component of reserves and surplus. You have to give a lot of focus to this and analyze it properly. The amount of retained earnings with the company help in the expansion of operations. So, retained earnings is a very important figure. You will have to check whether the management of the company is using the amount of retained earnings efficiently or not. This means how much profit is the company earning from its retained earnings, in what ways is the company benefiting from the retained earnings. You will have to check all these factors. The reason why we are talking about retained earnings so much is that it is a very important figure. Now, you will have to check the efficiency of management, meaning how efficiently is the management using the shareholders' equity. To check this, you will have to use a ratio, which is called return on equity. Here, along with the analysis of financial statements, we will also cover financial ratios, so that you understand the analysis of financial statements in detail. The advantage of covering financial ratios with financial statements is that you get to understand why financial ratios are important, where they are used, and why. Sometimes people just learn up the financial ratios of the company and focus on the values of PE, EPS, ROE, etc. But that is not effective. You should understand why the value of EPS is what it is, whether it is at the right level for the company or not. If the company's ROE is at a certain level, then why it is so and whether it is the correct level for the company. Checking these things is more important. You will only understand this when you focus on both financial statements and financial ratios and apply them together. So, from here on, whenever you analyze financial statements, you should apply the financial ratios then and there to gain a better understanding. The formula to calculate return on equity is net profit divided by shareholders' equity multiplied by 100. You will get the net profit from the profit and loss statement. Here, in the profit and loss statement of ICICI Securities, we can see that in the financial year 2018, ICICI Securities made a profit of 557 crores. And in the balance sheet, we can see that the shareholders' equity of ICICI Securities is share capital plus reserves and surplus is equal to 834 crores. So let us calculate return on equity for ICICI Securities for the financial year 2018. In the financial year 2018, ICICI Securities made a profit of 557 crores. Divided by shareholders' equity, that is 834 crores multiplied by 100. This is equal to 66%. This means ICICI Securities earned a profit of Rs 66 on using Rs 100 of the shareholders' equity. This is a very good figure. Here too, there is no point in checking the ROE for only 1 year. You have to check the ROE for at least the last 5 years. You will have to check whether the management has consistently made good utilization of shareholders' equity or not. You have to analyze the return on equity formula quite well. Sometimes it so happens that the company uses a lot of debt for the expansion of operations. In this, sometimes the company's profit increases as well. So, if a company is using a lot of debt for the expansion of the company and increasing its profitability, then, while calculating the return on equity of such a company, you will think that the management has used the shareholders' equity very well. However, the fact of the matter is very different. Instead of using shareholders' equity, the company has used debt to increase its profit. So, how will you understand this? Here, along with return on equity, you will also have to keep track of long-term debt. Check what the return on equity has been like over the last 4 to 5 years and how the long-term debt has increased over the last 4 to 5 years. So you must have understood how much effort and attention is required for analysis. Sometimes ROE hides the debt amount. You have to extract the hidden debt and analyze that too. Let us see how it is done. After shareholders' equity, we come to liability. There are two types of liabilities, non-current liabilities and current liabilities. Non-current liabilities are those which last for more than 1 year. For example, if the company takes a loan for more than 1 year, then that will be a long-term liability or non-current liability for the company. Current liabilities means short-term liabilities or those which are for less than 1 year. Here we can see that the non-current liabilities of ICICI Securities includes two things: other long-term liabilities and long-term provisions. So there is nothing called long-term debt over here. This means there is no long-term debt of the company. This is a very good thing, but we still have to analyze debt so that you understand all the things associated with long-term debt. Here, ICICI Securities has no long-term debt. So, in the next part, we will take examples of such companies which have some amount of debt. Then we will analyze the debt. If you would like to suggest any company for debt analysis, then you can send us an email with the name of that company on finnovations555@gmail.com. In the next part, we will understand the debt analysis of companies in detail. The analysis of financial statements is a very interesting thing. I love the analysis of financial statements. Whenever I'm bored or have nothing to do, I choose any company and start analyzing its financial statements. I find it very interesting and get a lot of fun from it. So just wait a bit. In this course on fundamental analysis, we will understand financial statements in a lot of detail. We hope that you have liked the video.